if I already bought more, then here we go. We see it fell all these months. Here, I started buying, again, the breakout falls there. Not when it broke here, here it broke this one, here it broke and retracted. And now it's here again. Already this month, it's already up. I mean, maybe do this anyway. No, maybe it'll come back. And again, if it does this, I wait again, and when I break this again, I buy here again. If we are talking, Netflix would have to disappear. I'd have to. That is, there are many factors that would need to happen for Netflix to disappear, for it to go bankrupt. Not like what happened to Blockbuster, but it is the first. It has its own production company. That is, there are things that can be arranged so that its memberships are safer. I mean, in the end, the important thing is to understand. If not, if I don't get distracted, imagine you buy here and you just recover from here. I mean, it doesn't have to keep going up all this, but it gets to the middle of what it went down. That's how they have to see it in the end. How were you when they were interviewing me and we were talking about Netflix back in the 2000s where the price was 180? If you realize after this drop that we can see the price was already to buy here. Right now and in this video, I'm going to share how I operate long term. How come I invest in assets like stocks or like cryptocurrencies and use Forex capital flow so I can inject this into real estate? Stay in this video because I'm going to teach you how to invest in stocks. And not doing it by patterns, by indicators, by anything from technical analysis, but simply by percentages, by risk management and distribution. So let's choose a random date, May 2018. What we're going to do is we're going to use an index, the SP 500, directly the stock, but we're going to go to that year 2018, then May. And we're going to do it with $10,000. The important thing to understand this amount is that it will not necessarily be leveraged. That is, you will only trade 3%. Are we going to do it on a 4-hour chart? Then the risk is already going to be 3%. This, of course, can vary. It can be 0.30, it can be 1%, and it has to do with the number of orders that are going to be together at any given time. Here, if you can notice, I'm being able to observe the monthly movement. Then let's start the simulation. And one of the important things is that unlike normal trading, you have to use technical analysis, put lines. Really, this is going to be an average and comes with the notion of buying cheap and selling expensive, for example. Here, what we are going to do is put a pending order of bill limit, and you will realize that although I am putting stop here simply so that I can leave the simulator, put the operation, accept the orange line is from the pending order to the limit. But what I'm going to do is I'm going to erase the stop and also the limit. So it doesn't have stock and it doesn't have limits. It's just going to be floating around. And this is because you have to understand that we are talking about an index or an asset that is going to appreciate over time. In fact, in the long term. So is it to operate intravia or to operate this week? Is it to understand that you are going to invest a certain capital in this particular index, for example? But you have to start seeing it as a business when you are going to start a business. For example, if you can start a restaurant, many times you are going to have a certain capital, a certain margin with which you can work. Your own investment, capital, loans, etc. And it may be that At a certain point, you are buying and you are losing money in payroll, in inputs, in rent, in electricity. And this is what the trouble would be like. Obviously, if you have a business model that is profitable, then you are going to recover all of that. So when we are operating in this way, you have to understand that there is going to be a 3% float. You could say that it is a little aggressive because at the end of the day, if we are talking about the long term, it can also be for money. If you can see here on the platform, you can also put money into it. But right now, we are only doing it at risk. It may be that of those $10,000, only every time you come in, sometimes $100, sometimes $200, sometimes $300, sometimes $400. You know, here we are doing it by percentage and understanding that we are doing it based on that monthly movement. What does this mean? That also once I already know when the month ends and when a month begins, I can already see where. I want to buy cheap and I'm going to do it for a percentage. I don't need there to be a correct pattern. I don't need there to be like something special. It's just here, these lines that you're seeing here are just giving me different levels of percentage. For example, if I am buying, I'm going to put 1 hour on the slope. What I want is to understand what percentage of the previous month's movement. I can wait for the price to return and buy it cheaper there. As you can see, you are starting to position, you are starting to see how the indices in the end are trending. What we are doing is that we can inject money into that index, but we are doing it in a specific way that has to do with percentage as a business. No, it's not in a business, you're not. Waiting or looking at a graph to see when is the right time to buy certain inputs or hire someone. I mean, that's something that you learn as you have more experience. But here we do have objective information, which is the monthly movement. And yes, I have a percentage that in the end, more than a percentage is a division. If you can notice here, the entire month is divided into 12 and 34. Blocks then, what are we doing there? We are buying every time he retracts one of those. You can choose every time I retract the first block, the second, the third. That's when you're going to start making purchases. And obviously, there's an opportunity cost. If you buy and the price, you put a pending order and the price doesn't get there and it starts to go. Well, the important thing here is that you will have the next month to be able to continue shopping for that one. Retrograde percentage. So as you can see here, this tool allows me to see what the percentage is. We are also going to see that the important thing about this is capital management. That is, that you can realize when you also have to stop, but also when certain operations you should not enter. Because of how the movement is, for example, here, this fall is already there. Changing the monthly trend. So, what's going on there? Well, you don't want to buy here anymore because you don't know how much the drop is going to be. Here, the one you already have is obviously suffering. In this case, we are talking about 3 operations since we are seeing negative ones, otherwise they were closed. And then here it comes. How much more is it going to go down? How much more is it going to support the capital you have? That's where classic drawdown comes in. You're going to put up with it, not what's where it comes in. Obviously, the criticism or the opinion of many people comes, because in the end, the first thing you have to be aware of is those $10,000. What does it mean to you, to a person who... It has cost him a lot of time, sacrifice, because obviously, at the moment the prisoner is falling in this way, he is going to feel very uncomfortable. Why? Because the representation of that money, what his family may say, the way he earned it, the sacrifice, that's all going to represent different things to different people. Total, that $10,000 is. It is 1% for the income, for the economy of someone else who, before putting it was already willing to lose them, obviously because of having a greater profit, since we can see that here the price is falling. Now another important thing to observe is how the market, when it starts to fall, does it faster than when it rises, if you notice those previous months. Now for 3, 4, 5, 6 months rising, and in 1 month, practically in that month, 2 weeks were of those resounding drops, and practically recovered what had risen in those previous 6 months. This is where the manipulation part was. This is where you're going to hear the news about the SP 500. He lost 30 by 101, 10%. It was a historic drop for the stock markets, and this is where the mera of people start to panic. Why? Because for it to see a shock, it has to be fast. If you realize the growth is slow, it is slow, but the fall has to be faster, and that creates a shock. That creates emotions, that creates surprise. And then when people are surprised, it creates emotions. And those emotions are going to be that most people who were buying what's going to happen, they're going to start closing. They're going to start wanting to sell when others are going to be buying cheaper. Now, so that you are not guessing and you don't have to listen, they tell you what is going to happen, and you are going to get lots of content about if you have to buy Bitcoin and if you have to sell it, how far it is going to go, and a lot of opinions. Are you still watching the price? Keep watching how this monthly sequence again here is changing from bottom to top. So here we are again. Obviously there will be positions that you withstood, because it is the key to having an administration where that capital right now that we are at 3%, but it can be 1%, 50%, and you are distributing it obviously because you want to buy, because this is appreciated over time. So what's up? Here what we are doing is buying simply because of that monthly trend that is no longer showing that it was bearish in the last 3 months. It is already changing bullish, so obviously this is going faster. But when you are already paying attention to a certain index, a certain action, like in the introduction to Netflix, Tesla, YI, after watching this video, I'm going to watch any action cryptocurrency, and you see its monthly movement and realize how the monthly movement is what tells you when it is probably going to buy. And if in 1 month it goes up again, and then another month it changes again, you stop, you hold on, and then the monthly moment is going to rise again, and there you buy again, and then it is going to be a question of accumulation and also of closing positions. Right now, we are not there. Focusing so much on closing positions, we are going to see how it develops, and it is also a personal decision, because as well as closing to accept losses, it is important to close to take profits. So you can give yourself here again, the monthly movement has changed, but again it is changing upwards. So again, he's giving us an indication of what? Well, the chances that it will continue to rise in that monthly trend, since they are now the ones that guide us to be able to buy more. As I said, I am putting the stop profit for the platform, but I have already removed it, and only all these are floating. So if you realize when you put in those operations, it will depend of a percentage of retraction according to objective information, which is the monthly course. So back here, what? Even doing the prices going down, it's going in that monthly movement down. So here is, you stay with those positions here. For example, if you see that you already have a 27 by 101, 20% sol, and you wait until the monthly movement is bullish again, or you endure, everyone is going to be different. Everyone is going to make that personal decision of risk, of uncertainty. That is why trading is not a trading formula. It is simply having a notion, knowing how to have a good relationship with money, knowing what this business is about, having the cognitive ability to close, but also to endure, but also to take profits. And that's what he plans to make the difference between each individual. So here, if you notice again, the movement is already showing us that the monthly trend is going up again. So again, you're placing more orders. That's one way. Remember? It's a little more aggressive than normal way because if so. You could have entered with only 1 or 2 orders, hold them. When the monthly holding goes up again, you don't even have to put in orders and you just keep holding on. And that amount of money is going to be more and more profitable over time. But here we are talking about intervening more in that upward trend movement. So you realize, like here, what each frame is showing us is the continuity of the monthly movement, which there are only 2 directions. Up or down, it can go up or it can go down, that is, there is no more. And for example, there are also going to be times where you suddenly see the graph and it's falling. The price, as I've mentioned in other videos, is in red, which you really have to change and buy. And when the blue is there, you want to sell the put to what most people do. And then already based on this, you can buy cheap from the market. The price was dropping. You bought within the percentage of movement of the previous month. The price continued to rise. That is, obviously you have to practice this, understand the notion, and do it with different years. But that's the key to simulation, and not that you take a little piece and put a line and a pattern and say that such a concept was fulfilled. By then, sell the idea that the concept is what makes you a good trader, and not the understanding of the fundamental principles that exist in any chart, in any instrument, but that allow you to have a quantitative logical notion. A positional analysis and not a subjective analysis, an analysis based on something novel, on biases, but on something that is always there. In this case, if you realize the basis of the substance is the monthly movement. In other words, there is always a beginning of a month and an end of the month, and the month will last the same and go. Some will last 31 days, others 30. But in the end, it ends. You know when it ends and when it ends and when the other one starts. So you see how the price is dropping. This city is buying cheap. No, you are not buying because you know that it is not going to change. But you are simply realizing that you're going. You are now buying something to observe here. Realize how, again, before they have a significant drop, the price has risen. 12, 3, 4, 5, 6, 7. Let's say 8 months and the fall comes. Why? Because you have to understand that they have to shake most people. Why? Because if the index or the stock or whatever continues to rise and continues to rise, well, how easy it would be. Because I don't buy anything else. The trend is bullish, and well, I'm going to make money. That is, everyone would start to be rich. Everyone would start to withdraw money. What makes it difficult is this. It is holding on. Position, have a notion of when to close positions, most or all, etc. And understanding this bearish movement or enduring it is not necessarily I am, but enduring it with negative positions. Here it is being done, but put up with it in the sense that you understand when already. This movement of falling and everyone can say how far you are going to go and how long you are going to hold on. And everyone can speculate. But at the end of the day, that is going to pass. The monthly movement is going to show that it has already changed again from bearish to bullish. And that is all you have to expect. There is no science, there is no other indicator. A very average. That is, the price is simply showing you when through. A numerical process is returning from bottom to top. Because as I said, right now we are not focused so much on closing positions later we are going to implement that part. The interesting thing here is that you realize how the last ones, again, basically since February, until February again, that is in 1 year, 1 year of bullish movement gain in a month is pulling it. That is why here you have to understand why there is more surgery for a matter of averages, but to get out, to get in. But the management guide gives it, in this case, the monthly movement. So we are going to see how in 2 months practically, or a month and a half, what he traveled in 1 year is erasing, but that is on purpose. That is, it has to be like this. Because if they didn't, then what would happen? Well, all those people are still buying. And when you remember that when there is a trend, it is already appearing on the internet, everyone is talking. Everyone is saying that the trend that you have to buy here is that you are already late. It's the last thing, because most are already realizing it. So when the majority are realizing what is happening, well, obviously there will be more injection of money. Therefore, when it falls, there will be more money to buy for those who want to sell and take compensation. And what's going to happen here? When it's going down, it goes to the mind, it's going to say, but when I go in, because I can buy and I can buy, and it keeps going down and it keeps going down, that's one of the ways a lot of retail traders want to make money that obviously can work. YYA. It's not that you can't make money, but you don't have to suffer from being buying and buying and buying, but just wait again for that monthly movement. This one again tells you how he is doing it here, that he has already gone from going down, now up, or no one. There is no rule, there is no law that tells you that you have to buy at the lowest price with a stop of 5 pips. In other words, those ideologies like smart money and all that are ego ideologies. That is where, look, I just grabbed the price to the point and turned around and looked at what precision. And I mean, that's ego, and ego is attractive, but it's attractive when you're not aware of reality, when you're aware of the basic, the simple, that has nothing to do with, it just has to do with with this. If the simplicity of the change, and here is changing since the previous month, then what happens to all those positions? Whether you put up with them, or either you shut it down, or you're just getting a little more aggressive and you're injecting more orders here again. Maybe you're not injecting orders that month. Well, because there is already an order floating there, and simply for protection you are not adding it to that position, which obviously has to do with a mental issue. When we do protection, it is because you need or feel calm with that protection. Are there going to be people who are much more aggressive and who are going to continue putting orders there like we are doing here then? But it's like what's happening now. The price starts to recover, and again it is already reaching that highest point before that drop, okay? So this allows you to start actually placing trades when the probabilistic conditions are already higher. And continue bringing operations to that direction thanks to an objective continuity, that is the monthly movement. For example, here we can start closing positions. There we begin to do that. We are closing all those that are the lowest ones, those that are already generating, understanding that obviously if the price falls again among more positions you have and the price is falling, it is going to come back. More negative, but I also have more positions. If it continues to rise, it will be more positive. So that's where the importance of capital management comes in, which is more of a, when we talk about capital management, it has more to do with how much can you resist. So negatively, you can resist the bill, obviously, no, don't thunder. Or resist see so much profit and don't let greed catch you. In the end, it is a notion of personal resistance, both resisting the temptation to want more and also resisting the temptation to be afraid, to get out before what you had already stipulated at the time. That is already a personal question. Capital management, no, it is not a mathematical formula. It is an objective awareness of what you feel, of what is comfortable for you. So you can see here, like once again, the price is showing that the monthly trend is bullish again. Here we are also going to see that there are some limits that remain floating. They can also be eliminated because those limits that were put down, it was because the price was lower and I was looking for a retraction from the month or the previous month. But if the price started to fall, it would already be clearly showing a monthly change. Well, those limits that were no longer there are no longer worth having floating there. So throughout this video, so obviously it doesn't get any longer, you're going to be observing that we just look at the monthly movement. I hope that monthly movement is measured, a pending order is placed, and it is simply promised. In other words, you are entering with a fixed risk. It is 3% per entry, and we simply use this. These lines to measure that setback based on the previous monthly movement and try to buy cheap, not try to buy correctly, but buy cheap. And that percentage is strategic. It's like understanding, as I said at the beginning of a business, well, understand if I am buying Gitomate, well, when Gitomate is expensive and when it is cheap. When tomato sauce is very expensive, it is better to switch to an alternative menu that does not use tomato sauce, and when it starts to be cheaper, then I buy more tomato sauce and I can freeze it. If the dish I'm making allows me to freeze it and not take away the quality, I can do that too. Let's say that's where the key of what they really bring is more of a practical question and not a question academically formulated, which is the same for everyone and that you have to know. But what's your strategy? Well, here I am really giving you a notion of, so that you can see the simplicity of buying assets that increase in value. But what is really important is the ability of when to close, and you will already be seeing it around this video. So I hope you can really pay close attention, see exactly how the price retracts, and you will understand how the price, after reaching a certain peak, begins to fall abruptly again. This happens mainly because it is liquidating positions of individuals who did not close in time or have lots of them. Also, if you are extensively leveraged, that sharp fall can be devastating. In essence, that's the constant battle of trading, because this is essentially a business. This is not just a game. It's not academic. This is not the search for treasure in the form of a strategy that I'm going to do exactly the same. And since, like the goose that lays the golden eggs, it's going to give me what I need and it's going to change my life, no, that's a struggle. That's a struggle, because that's designed for people to become emotional, lose, complicate, biased to be distracted, and obviously consume. And that's what you want to avoid. And the crucial part is to understand how to use, ultimately in a straightforward manner, a flow that will predominantly be on the rise, such as in the case of the SP 500. Moreover, over a longer period, you can exploit this knowledge and practice consistently to reach a strategy that effectively works for you, benefiting your economic condition. It involves your risk tolerance and your maturity, as well as your mental readiness at this moment.
When I entered that capital environment, I was still, as I was, very influenced by everything I had learned, and I hoped that graphics were the key, the basis. But within that capital environment, I realized that they, as traders, the traders they have inside, the difference between retail and institutional is that institutional ones deal with this information, and at the end of years, I am very, how can you say, very slow to. And there I understood, of course, that is the difference, that when one traces any system supported by the climate, it works much more assertively. And when I child it now with them, they don't know. But I child it when DFX logo and input Y there, of course it goes. I go like calmer, so it was difficult for me to understand that, but combining the probabilities of ethics and logo with the other is great. And now I am calmer with my entry, as well as having the probabilities of one is also quite powerful. Knowing that one can enter with one is also quite good information. Knowing that one is in air, that if you know that the market of the condition tells you that it is possible that rebound from the quite cool is the combination of two things. I don't think so. I haven't told Salazar. If I manage to talk to him later, they will consider me a big account. You have to tell him since living crazy. The other thing that you always said is that when one moves, if X logos one goes from smallest to largest, which is what is taught the other way around in the trading industry. So when I enter the wind, as I say, the winds of the market, I then see according to what the principles show, and I can go much further already having an entrance and already being inside because I can. I can see if I am coming out of a manipulation. If there was, I don't know, a process below one, always knows that, for example, when there is a day, and that day at the bottom, most traders were this one at the bottom, he took out the market. He knows that the movement is going to be much greater than 100 pips, generally a little more. So all that mixed information generates what is synergy, is called synergy, while I was now with that one, with this one who is a wolf. I left the other thing, and since I understood, since when I reached the level that I said now yes, I already understood what Luis wanted to say a little deeper. I hope I understand it well, and I put the other thing in there again because I said now I am kind of prepared so as not to get confused. That was recently 2 weeks ago with luck, and now I'm still reviewing the third stage of freaking low, and I always see the video I see is always that of Alejandro Villanueva, always not Villa when I see you. That video is a gem. I watched it like 5 times, 6 times. I don't understand what you do because it has to do with numbers. Is it mathematically justified? This isn't like something like that. Random, huh? This is more likely using the 4 principles. So to me, it's more believable, more reliable, more comfortable, easier to understand. And I always thought, always a question I had, I said, where did Louis get this? I said, because if Luis came up with it, he is a genius. I said I am one. One of the keys to understanding that the wolf is when one realizes that manipulation is the cornerstone. I have to repeat that a lot of times to myself. That's Angular Earth. From there, you go to everything the same. I thank you, Luis, for the opportunity, for having accepted me again. And without that, I would not have come to understand what I now see as a very good basis for trading with peace of mind.
Philosophy and in ancient religion, one of the wisest things is that they said that the kingdom of heaven is within you, and that nothing can be created from outside. Everything is created from the inside, so that you can be able to be profitable in the financial markets. You can't expect someone from the outside to give you something already assembled, something already done, something already stipulated, and that you just use it and make money. That's not how things work. Nothing in life works that way. Everything that works is because first it begins within, you begin to understand it, and then your actions begin to be a reflection of what you have first developed within. If you don't understand the fundamentals of pricing, all you're doing is trying to imitate someone else. You're trying to find someone who already gives you a formula and copies it. And so you think you are going to change your life when what is outside is really not going to change what is inside first. What is inside has to change. It has to understand. It has to understand. That is why the tools that allow you to practice, that allow you to see different perspectives in different ways without objectively biased biases, are going to accelerate that you have an objective perspective, and that is why it finally emanates within. The rules, the what, the why, the when, the how to do your trading in a simple way so that it can be profitable and can be sustainable. So remember, operate with logos, operate with logic. Until next time. Remember, we have advanced trading training that helps you operate any instrument and financial market and is definitive so that you go from being a consumer of strategies, methods, and systems based on trading ideologies to being a designer of your own methods adjusted to your personal reality. Contact us. I leave you the WhatsApp link below. In the description, subscribe to the channel so that you can understand trading in the deepest way that simplification will take you. Follow us on our other social networks, Facebook and Instagram, and I invite you to listen to our podcast, The Logic of Trading, that you can find on Spotify. Also search for my book on Amazon, The Reality of Trading, and realize why many people, thanks to this book, are changing the perspective of how they see the markets. The audiobook, The Reality of Trading, is now available on the fxlogos.com page, which you can start listening to for free. I genuinely wish you an amazing rest of the day, an outstanding week, and an even more incredible year ahead. Also, keep in mind, opera with logos, opera with logic until we meet again.